Hey, Bernardo Wealth Extended Family. Have Matt Haraburda, our Chief Investment Officer, here to talk about what happened in the markets and related to AI. So, Matt, give us a high level what happened in the markets in the AI landscape.
Yeah, absolutely. So on Monday, news kind of hit that Deepseek, which is a Chinese large language model company, came out and said that they were able to get output from their large language model that was comparable to that of OpenAI and other companies that are in the space. While there's a lot of details that we don't know exactly, like the amount of money and the capital that they raised to kind of achieve this, what is clear is that they were able to use less to produce the same, if not potentially more. So I think that really called into question. A lot of times people thought you needed NVIDIA chips and you needed a lot of them. You needed large data centers to kind of process all of these LLMs that people have been talking about. If there's a company out there that can do it for less, that calls into question what's the growth, how many of these GPUs and chips do you really need? So I think that's what really drove some of these single stock sell-offs like NVIDIA that we saw yesterday.
Yeah, and I think that's important because, I mean, we're seeing it in our business all the time. There's new technologies coming, AI, people building new models and different renditions of AI. So perhaps it isn't just for all the giant players to really make money off of it. And I think that's what ultimately kind of shook and rattled the foundation a little bit. It'll be interesting to see if this continues. I think one of the things here from our perspective is we've had a lot of conversations with clients about wanting to and how do we invest in AI. And I think the part in which we've stayed disciplined with was to say we want exposure to it, but we're not going to get out over our skis and really chase it. These are the things that you can run into. So I think that's really important. To your credit too, we've even shifted some dollars to more of the value side. Talk to us, Matt, about like the why behind value versus growth.
Yeah, absolutely. So I think coming into the year, our kind of philosophy was resetting expectations. Obviously, over the last 10 years, the equity markets have done really well, specifically within the growth side of the market. You really have seen that in the last 2 years with over 20+% returns in the general equity markets. So coming into this year, we wanted to kind of reset expectations. The price to earnings ratios for a lot of these high tech company names are quite elevated to the point where we did think that we should maybe reset some of our forward projections of capital market outlooks of what we can expect from the equity markets. So what did that really mean? It meant that we were adding positions that we thought were more value type stocks, because we do think at some point, just like we saw on Monday, where there's a big growth scare within one area of the market for AI, we wouldn't be surprised if some of that volatility comes to other areas of the market. So we wanted to be proactive to kind of sell some of those securities to go into more of the value part of the market that have lower price to earnings ratios to have a more diversified portfolio.
Give us a good example of a value company right now.
So a specific value company,
Sure.
or you think looking at the ETFs?
Or the ETF's value company. Give an example of
Yeah.
a maybe a financial or kind of showing the opposite of like an NVIDIA.
Yeah, so I think obviously a household name would be JP Morgan. That stock has done really well so far this year. A lot of the financials have done well. They're high dividend payers as well. So obviously it's not just the financials. There are positions such as like RSP, which is the equal weighted S&P 500. That's a core position for us right now. And rather than having a high skew towards the kind of the Magnificent Seven like we've talked about in the past, this owns an equal weight of the S&P 500, which does skew to owning more value type stocks.
Perfect. Good. Well, I think that's really important. I know we always kind of say we plan for this, right? And I think days like Monday help us to really understand that and say, well, we're not out just every day chasing market trends and trying to push the gas as hard to the floor as we possibly can, but really saying, how do we build a portfolio that can last through kind of good markets and bads, and ultimately be limiting volatility and kind of smoothing out the ride. So I think that's great, Matt. I think what we're doing makes a lot of sense, and ultimately trying to steer away and navigate through some of these areas that maybe look attractive one day, but you never know what tomorrow holds. So thanks for your time, Matt. And as always, please reach out to us with any questions. We enjoy these conversations with you. So thanks, and we'll talk to you next time.